This is Steve Hayes for the EPRA Annual Conference in London. I have with me now Ernst-Jan de Leeuw, Head of Real Estate Securities in Europe for LaSalle Investment Management. How do you see the general outlook for real estate securities in Europe over the next year?
I would say if you look at Europe, then we're in a low growth, low interest rate, low inflation environment. I think the low interest rates are in general pretty positive for real estate valuations. And looking at the current cap rates of real estate, then the gap of the yields with the interest rates are historically very high, and that makes us believe that the values are pretty sustainable, and that the valuations are correct of real estate at the moment. I would say, looking at the low growth environment, that is obviously not so positive for real estate. It means that there's simply less rental growth to be expected going forward. The low inflation means that the inflation correction will be less going forward. So that has an impact on the cash flows of the companies. Having said that, it means that we expect a total return in the high single digits, low double digits for the next 12 months.
Which listed property sectors and markets do you expect to perform best over the next 12 months?
I think looking at different sectors and markets, we expect that the difference between secondary and prime will continue. So the best outlook is for the prime markets where the supply and demand is in better balance. Examples of that are, for example, the City of London office market, which we believe is still pretty good going forward. Central offices in Paris can do pretty okay going forward, but also countries that have better economic prospects will outperform. Example of that is Sweden, has a better GDP outlook than the rest of Europe, but also can control their own interest rates.
What are the key issues for the listed real estate sector at the moment?
We believe that sectors where there's a mismatch between supply and demand will be very difficult going forward. An example of that could be, for example, the Dutch office market. There's a lot of vacancy. That means that the pricing power is in the hands of the tenants. So it will be very difficult going forward to lease up your vacant office space, or you have to put a lot of money in your properties to really make them leasable. Another example is countries that have just a worse outlook from an economic perspective. I think Italy and Spain will be very difficult going forward, and I think the main question is, do these property market prices already reflect what's going on in those markets? Aren't we still too optimistic on yields in those markets?
What do you see as the biggest threat to the global listed real estate sector in the next 12 months?
I think there are currently a number of issues. I think one very well-known issue is the financing of real estate companies. We believe that still a number of companies have too high leverage. Refinancing will become more difficult, especially for the higher leverage companies or companies with lesser quality assets.
Ernst-Jan, thank you very much. Thank you wel.
You're welcome, thank you.
For this and other industry interviews, please go to epra.com or REIT.com.